Hey guys, Mike here again. I haven't done a video for a couple of weeks. I've been sick with COVID and I didn't feel like doing anything that wasn't necessary. So yeah, it took me quite a while to get over this thing, but I guess that's what I get for being a bit of a COVID minimizer up till now. I'm getting my karma for saying it was just a cold. So anyway, I had the flu and a COVID flu, and I'm better now. Feeling good and ready to talk about Prosus. Okay, so I actually sold about 60% of my Prosus position a couple of weeks ago, and I'm going to explain why in this video. And it's not because I think the company's bad, but it's mostly because I realized I didn't have the level of knowledge that I need to have in order to hold something. I do an exercise. Thinking exercise where I go through my positions and I imagine various scenarios, right? So one of them is, what happens if the stock goes down 50%? You know, how do I feel about that? Do I think, oh, good, I can get more now cheaper, or do I think, oh, you know? And usually if I'm not happy about it, it means I've made a mistake with my reasoning. So I went through this with Prosus, and I went through that exercise, and I didn't feel like it was a definite no-brainer to buy more. And what that did was it helped me think about my position. Also, one of the reasons I record these videos is to have the ability to try and explain my position, and it helps me reflect on whether I really understand a company as well as I thought I did. And so after I did my Prosus video, I was thinking about it quite a bit and realized I didn't have the level of knowledge that I need to have to be a long-term investor. But it doesn't mean I don't think it's a great company. I think it very well could be a great company. I think that, you know, Manish Pabrai is no dummy, and he's made a significant investment, it looks like. And it's just, for me, I'm not able to hold something when based on somebody else's reasoning. I've had enough stocks in my life to know that I need to be really confident. I'll still do a valuation update here, so you might be interested in that. Okay, and just a couple other thoughts. Like, usually I have about two different kinds of stocks in my portfolio. One is a type of stock where the stock is so cheap that I can afford to make a mistake. I have a fairly significant margin of safety. So if I have a company that I don't 100% understand, but it's extremely cheap and allows me time to learn it more and also to make a mistake. Like, for instance, Teva. Well, I do understand that company quite well right now, but it's trading at a PE of 3. So even if I didn't fully understand it, there's a margin of safety there already. And same with Shinoken. I think that's trading at 5 or 6 times earnings right now, and the earnings are growing. So even if I didn't fully understand that, there's the ability to make a mistake. The other type of company I look at is one where it's more of like a great business at a fair price. And with those kind of businesses, I usually have to have a really confident view that a catalyst is coming that's going to allow the company to hit these growth targets it needs to in order for me to pay a higher price. Now, Prosus was in that basket, but I don't really have the catalyst or the confidence in the growth rate going forward, and mostly because it's a big, complicated company, and I don't really understand it enough yet. Yeah, okay. So I'll go over the updated valuation here. One of the things that some companies have to do is they have to report their the change in the value of their investment portfolios, and they have to put that on the income statement. And Tencent is one of these companies that has to do that. So the value of the stocks that they hold and the companies they own can really swing the earnings in one way or another. And in this valuation, I'll do it without those values, because in Q4 they had a very big markup on that stuff, which skewed the earnings up quite a bit. If I remember correctly, I think they posted 35 billion in profits for the year, US dollars. But on this, and that is the type of analysis I did the first video, where I included those changes in market value. However, on this one, I'm going to do it without that. So we'll do an updated valuation, and we can see that number. Based on their 2021 final results, the earnings excluding those investment adjustments was 19.5 billion. So that's a very good year. A company that can make 20 billion in a year is a great company for sure. So revenues for the year were up 16%, which is a great year for any company. So that's a really good number. And their market cap currently for Prosus is 96 billion euros. And that's on Google, actually. So if you actually adjust for the actual amount of shares they have outstanding, so according to their website, it's 1.42 billion shares outstanding for Prosus. That means the market cap is actually 65.8 billion. So that implies that the Google number is actually wrong by 32% right now. If we look at Tencent's market cap is 456 billion, and the Prosus actual market cap in US is 69.22 billion. So if we adjust for Prosus's stake in Tencent, that implies that Prosus is now trading at an even bigger discount at almost 50% to their Tencent holdings. And that excludes all their other holdings. That doesn't include any of their investments, any of the companies they own. So the discount to actual net asset value is actually bigger than that. But I'm going to ignore that stuff because I don't actually like any of their investments. I don't like the food delivery companies. I think that's not a real business as far as I can tell. Just people with cars and apps. Maybe I'm wrong, but there's a lot of that kind of stuff that was in style in the stock market last year, and it's come down significantly, and I think for a good reason. But anyway, if we go down here, Tencent earnings is, like I said, 19.5 billion. And that means if you take Prosus's stake of the Tencent earnings, then Prosus is now trading at a 12.3 multiple. And that's actually higher than the last one, which is 10.6. And that's because I've taken out all the investment adjustments. So cash earnings there, or not cash earnings, but earnings, it's at a 12 PE in Prosus. Now, if we look at the Tencent number, I forget what that number is. So Tencent is actually trading at 23 times those earnings at the 456 mark. And for me, that's 23 times earnings. And that's the level where I need to really understand that I am confident that the growth rate is going to be very high going forward. And I don't know the company well enough to ensure that they're going to get like a 20% growth rate going forward. It's a big company. It's difficult to grow at those high rates. I know some people do valuations with 25, 30% growth rates going forward, but that is a big hurdle to get over when you're such a huge company. And I don't have the insight into the earnings that would make me feel confident in that. So that's why I trimmed my stake. I still have a 2% position in this company so I can keep an eye on it and keep learning about it. And who knows, maybe one day I'll think, oh, this is actually a fantastic company like everyone says it is. I really understand that. I'm happy to stand on my own investment thesis. And finally, if this company did fall even further, I mean, let's say it got cut in half from here, then it might fall in my other bucket where it's so cheap that, like a 11 or 12 PE on 10-cent shares, which would put Prosus at 6. That's at the point where I go, okay, I would be comfortable to buy this, even though I don't really understand the complexity of the company. I think that I'm getting a pretty good deal. And just a couple of couple of notes on quarter one for Tencent. I think there's a very distinct possibility that quarter one's going to look pretty bad, especially when they include the market adjustments for the investments. So just if you own this company, be aware that the market might react badly to these first quarter numbers, because a lot of the stuff they own has come down significantly in the first quarter of the year, like a lot of these NASDAQ kind of stocks. So I have a feeling there's going to be a fair hit to their earnings on that front. Yeah, I think that's probably it for now. And yeah, if I get other thoughts on Prosus, I'll definitely share them. But I just wanted to be upfront and hold myself accountable here. Say I made a mistake on my investment thesis in the first time, and I've pulled out. Yeah, so thanks for watching, and have a great day.